Welcome to the final presentation in this series on the Australian R&D Tax Incentive. Welcome, my name is Stuart Hazel, and in this presentation we're going to be talking about compliance and integrity with respect to the R&D Tax Incentive in Australia. As with all the presentations in this series, I've used my best endeavours to ensure that the information presented is accurate and up to date. However, changes do occur within the R&D tax incentive from time to time, and thus it's important to consult business.gov.au to get up-to-date information relevant to your organisation. A question that is often asked of me is how seriously do I need to take compliance and record keeping? The short answer is that you do have to take record keeping seriously, as the R&D tax incentive does form part of the Australian Tax Act, and there is an expectation that all organisations claiming the benefit will maintain the appropriate records. A few years ago, this was emphasised in the Australian government budget, where a number of initiatives were introduced addressing the integrity and enforcement under the R&D tax incentive. This is an extract from the budget papers of that time, where the government identified integrity, enforcement, transparency, guidance, and the administration under the R&D tax incentive, all being tightened and enhanced. Indeed, there were several cases publicised in the media of crackdowns with respect to the R&D tax incentive. For example, this case involving the Commonwealth Bank of Australia and others, where companies had to repay millions of dollars following government audits. And indeed, it is not only current records that may be subject to review, but records that go back many years, as in this example of ozone manufacturing that covered nearly a decade. Now, I cite these examples not to dissuade people from applying for the R&D tax incentive if they are entitled, but is to emphasise, however, that appropriate record keeping is important to compliance under the R&D tax incentive. As I have indicated in other presentations, that record keeping should be compliant with the standards appropriate to your industry, and if done well, should be of benefit to the organisation in tracking their R&D activities for internal purposes also. Recent guidance from AusIndustry has indicated that they will work with companies that demonstrate that they are trying to get their record keeping right, as demonstrated in this schematic taken from the business.gov.au website with respect to navigating the tax incentive. In my experience, most companies are either compliant or working diligently to be compliant where areas requiring improvement have been identified. I would strongly encourage companies who are interested in applying for the R&D tax incentive to consult the information on this web page. So what are the types of things that are likely to draw attention to your company when filing for the R&D tax incentive? An audit or review from AusIndustry may occur the first year a company submits their registration application. This is particularly common where companies prepare their own registration documents and may not be fully conversant with the nomenclature used within the R&D tax incentive, and thus may make some elementary errors. Another trigger are where activities may appear to be non-standard or on the exclusion list with respect to core activities. This is particularly common in the areas of information and communication technology. Other areas that may trigger a review or audit include a lack of evidence that you have contemporaneous records of your R&D activities, where there is not a well-developed hypothesis, concept or idea that you are testing as part of the generation of new knowledge, where there are elements of the project that would appear to be available to the knowledge base of the industry in which you are working. Thus, where you have a project that is built on an existing knowledge base, it is important to identify the areas where the research will identify new knowledge. That is, just because there is knowledge in that field does not mean that your activities do not represent eligible R&D. Other parameters that may be considered triggers for a review or audit by AusIndustry include areas where there may be no evidence of a high technical risk with respect to the project. Technical risk is an important element of the R&D tax incentive. And where you have a project where you believe that a person reading the registration document may not gain a full appreciation of the level of technical risk, then it is incumbent upon you to explain that risk and why the project is essential to the development of new knowledge. An error that often occurs within the R&D tax incentive is for organisations to register a core R&D activity with no supporting activity. This would be very unusual and may be the result of misclassification of the activities between supporting and core. And thus, if you cannot identify a supporting activity, you should consult AusIndustry or a registered tax agent. Another area is the lack of a clear link between the core and supporting activities. And we have previously discussed the issue of direct links and for the dominant purpose in this series of presentations. Another error that occurs is where applicants fail to update their activities each year as they register with AusIndustry. That is, having registered the first time, in subsequent years, they are not taking the effort to explain how the project has evolved and developed over the period. I have mentioned previously ICT-based projects, and these can be particularly problematic. The areas of concern here are activities that are on the exclusion list, projects that lack technical risk, and the inability to explain the source of new knowledge. Companies working in this space are strongly encouraged to consult AusIndustry or a registered tax agent prior to submitting their registration document. And finally, high levels of expenditure have the potential to trigger a review or audit. There is nothing wrong with having a high level of expenditure. Indeed, many projects that are eligible and validly claiming R&D activities do have a high level of expenditure. But be aware that this may attract the attention of AusIndustry or the ATO in some circumstances. This brings us to the end of this series of presentations on the R&D tax incentive. It is important to emphasise that the R&D tax incentive is an entitlement. That is, if you are undertaking eligible R&D activities and are an eligible company, are maintaining appropriate records, and can demonstrate a link between the activities and your expenditure, then you are entitled to claim the R&D tax incentive where you are generating new knowledge based on a project with technical risk. Whilst I've presented information on compliance and record keeping, please understand that these do not have to be onerous in nature, and if you can demonstrate reasonable diligence with respect to the areas identified in this series of presentations, commensurate with the standards of your industry, then you should have a reasonable expectation of being able to address any inquiries from AusIndustry or the ATO. And again, I would encourage you to consult with AusIndustry or a registered tax agent with respect to the R&D tax incentive should you have any concerns or require additional guidance. This series of presentations should be considered an overview of the R&D tax incentive and the requirements upon your organisation if claiming the incentive. And these presentations are not intended to be a definitive, all-encompassing overview of the R&D tax incentive. If you have any comments or questions of a general nature, please feel free to email at the address indicated. And if you are interested in this series, please subscribe using the subscribe button below. We are always interested in ideas for future presentations in this series.